Hello, everybody. This is Coach D with TackleTrading.com here to give you this week's stock report. I'm going to start out with a chart of the E-mini S&P futures. And I'll tell you what, after last week's market action, bear's clearly a great week to be a bear. A lot of the price movement driven by fear, technical movement, the Chinese markets getting shut down, et cetera, et cetera. So you got a lot of moving parts in here. And as a technician, some of the things that I think are important to understand is that there's a high probability for reversal in here. So let me see if I can pop open the drawing tool here and just kind of point out, like, you can connect the dots on the bottoms here, and I did not draw that very well. Let's give that another shot right there. And we'll go kind of ballpark this trend zone. And it's what I would consider oversold. You've got this drop in here. You've got 1, 2, 3, 4, 5, 6, 7 days. This is pre-market activity on Sunday. And it's just, down 7, 8 days. Statistically speaking, 8 days is not, 10 days is a big run for the market. And size-wise, the size of this move in general, if you were to kind of ballpark out like how much price action it's covered, you've got a pretty big move on your hands for the market. And it gets to the point where I start to consider it range down. Now, the other big thing in here I see is 1900. Big fat number. And if we were to actually take this and drop out into like a weekly time frame here. Let's see if I got a weekly time frame. Nope, let's load one up. I'm going to go into here and go pop in like a ton of data here, just so you can see what I'm talking about. We'll go from the bottom here, include that, and if you want to grab like a channel type tool, you can kind of ballpark out the bottom of the channel there. And it's problem with channeling is little subjective because you're the one plopping the lines on there, but you're trying to connect as many bottoms as possible. So that's ballpark bottom of the channel. Now you'll also notice here that you see a significant kind of a multiple top, but we call that a gigantic M for murder. And so this zone in here is going to become super critical. But it is in that kind of general trend range, again, just kind of in that ballpark. And then back to the daily time frame. Let's go drop back into that daily time frame and just looking at the price action. You got huge volume in here, well above the average. That's a 20-period moving average on that. And in general ballpark channel zone, there's this is from here to here. That's the last ditch fib zone right in there. If you wanted to measure Fibonacci's from that pivot out here to that pivot, that's the 76.4% right in there. There's nothing to say that it has to turn around, and there was a lot of downward momentum coming into the market. But don't be surprised if you see a short cover, if you see a bearish, buying to cover, and some minor bullish activity in here. And I'd expect maybe a 3 to 5 day pop. May happen starting Monday, Tuesday, not sure which. But keep that in mind that the overall pressure and tone is bearish. Now, that being said, let me drop out of here and let's pop into the volatility index real quick before we go look at the other major market indices. And you see the VIX popping up. Now, the VIX is high and it's getting out above 26, so that means your option premiums are going to be pretty spendy. And if we're anticipating a reversal, you can watch that. And there's nothing to say, again, it can't get worse, can't get uglier, but don't be surprised if we see a reversal this week. Let's pop open the core 6 ETFs that we're using to track the market, and we've already looked at some of these just by default by looking at the S&P, but they're going to be very, very similar here. So what we see here is, again, the S&P spider is, on the ETF, you see some gaps and holes. You don't see that on the futures. All moving averages have crossed over. It's trading down, broke through some key support. That's the 200 level. Again, 990 or 1900 on the index, and it closed heavy down, but it is, I would consider, overextended. That's just a big drop. Not to say it can't go further, but don't be surprised if we see the revision to the mean. Same thing with the diamonds. Big range down. Heavy movement, heavy volume. NASDAQ, big range down, heavy movement, heavy volume. That's, again, as big as swing ranges you'll typically get. Here's an example of the Russell 2000. This actually really could be a good illustration right here. The size of that drop before you get a correction like that, that's kind of what I would be expecting, is a correction that looks a lot like that. Size of this drop here. It's a very good example if you were to kind of compare the size here. And down, 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 pop. Down, 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 pop, maybe. Here's the UUP dollar index. Policy, it's above the 200 period moving average there, kind of trend zone-ish. It needs some upward confirmation. It can violate and break down, but the overall pressure is up. And if you track the dollar index, that's probably a better indication. I'm going to be cautiously bullish on the dollar. And then this is the commodities ETF. And basic materials don't do so hot typically in the very first part of the year, but they recover in February. So you see some slowing momentum in there. And so you got big drop, less of a drop, seeing probably slower drop. And we can see it like turn into an inverted cup and handle and drop, but it can also, this is where you see W's form. And we don't expect them to really start to recover until February. But that is your basic broad market overview, and we'll get into the sectors in the next video.